Hello, I'm John Harrison, Executive Director of ADISA, the Alternative and Direct Investment Securities Association. I'm here today with Dr. Randy Anderson, who is the President of Griffin Capital Asset Management. Dr. Anderson is also one of the fathers of interval funds, and today we're going to talk about interval funds. Dr. Anderson, since you were there at the very beginning of this, give us a brief overview of interval funds, the structure, what they mean.
Oh, sure. Well, thanks for asking the question. You know, interval funds have been around for a while, but they've really become more mainstream really over the last 10 years. You know, the interesting thing about interval funds is they're governed under the 40 Act, so you get all the protections there. Most of the interval funds, they take money in every day and they produce a net asset value every day. So it looks and feels a lot like a mutual fund. So there's a lot of transparency in that process. And because of that pricing transparency, you see really nice fee structure. The thing that really differentiates interval funds is that they provide liquidity on an interval. You know, that's kind of where the name came from. Now, the interval can be many things according to the SEC, but most interval funds have sort of adopted about a once a quarter liquidity profile. And when you open up that window once a quarter, liquidity has to be offered somewhere between 5 and 25%. So a typical interval fund will offer 5% once a quarter or 20% per year. Well, and that really allows for a nice structure and a lot of portfolio management flexibility.
So over the past 8 or 9 years since they've become popular, what are the trends? What's happened? Where have they gone?
Well, they started out really with real estate. So a lot of people did real estate interval funds where they combined a lot of really good high quality private real estate investment trust securities and they combined them with publicly traded REITs. And that worked really well because you had some liquid with some less liquid securities in the portfolio, and that was a nice research-driven process. Since then, it's also evolved. We're seeing a lot of top sponsors come into the space and also offer up credit interval funds. And these credit vehicles work nicely with the interval fund structure as well because it allows you to combine both liquid and a little less liquid securities in a portfolio. Even more recently, we've seen some real asset type securities come to market. And I think if the trend continues, we'll probably also see PE for the first time kind of entering into the space.
So what kind of investor typically ends up involved in interval funds?
Well, the interesting thing is investors of all types. It's an evergreen type strategy, and like people like to invest in large cap stocks or they like to invest in bonds, people want, say, real estate, or they want alternative credit, or they want the real asset exposure. And since these are evergreen structures, people are largely using them as asset allocation plays. They're less of a deal where maybe you buy some real estate and you hold it for 5 to 7 years and look for liquidity event. These are more long-term plays like you would get in a traditional sort of model type portfolio, if you will.
So now that the structure is accepted, what do you think comes next for interval funds?
Well, I think you're going to see more and more. I mean, when we look at the registration, we're seeing sponsors of all sizes, small new entrants into the market to some of the largest asset managers globally across the world. I think we're going to see continued innovation. We're going to see more adoption of the strategy. And since more capital is flowing there, you're also seeing a lot of people work on the technology solutions. One of the challenges has been that the redemption process is a little bit more clunky because, again, it's once a quarter as opposed to every day. But because of the asset flow and asset mix, you've seen a lot of investment in that technology, and I think it'll become more and more adopted over time.
Dr. Anderson, thank you so much for your help, and we appreciate all the work you've done on interval funds. I'm John Harrison, Executive Director of ADISA, with Dr. Randy Anderson of Griffin Capital, and this has been Interval Fund 101, and we appreciate your view. Thank you for joining us. For more information about interval funds, please visit adisa.org or realassets.advisor.com.